we thought that we might see a little bit more, at least in the long end of the curve. There was a really important phrase in there where they talked about how that even if they were going to be cutting rates, that they might still continue QT, which in theory that would keep upward pressure on rates going into next year. Then really we'll turn to the December meeting, because that's where we think it's more important for the outlook for rates into 2024, because we get an update to the dot plot. And right now the dot plot only has 25 basis points of cuts priced into it. That compares to the 100 basis points that's in the market, in the bond market. So that's a pretty wide gap. We'll have to be watching closely to see if that gap closes.
What do you think about the rally we've seen to this point in equities, just based on what's happened with yields coming down?
Yeah, certainly that's been the kind of wind beneath equities' wings to have yields moving down. We also know that we have these seasonal dynamics, and I think it's really important to note how different they are versus last year. Just because last year the largest weights in the index were down a lot, so they were big tax loss selling candidates. This year, the largest weights in the index are up a lot, which means that people probably are not really wanting to recognize tax gains into the end of the year. You also have things like window chasing or window dressing and positioning chases. It's probably why we're seeing so much strength. And then we'll have to really assess where we stand on things like positioning and sentiment and valuation once we roll into 2024.
Yeah, that's what I was going to say. Do you buy this at this point? Is this a time where you would say we'll step in even with the gains we've seen? Do you think the run continues, or are you worried about pullback at some point?
Well, I do think that we are overbought right now. So in a very short period of time, respecting the fact that you've moved up very far, very fast, being overbought isn't necessarily a bad thing in the medium term. It can sometimes be a sign that people are just clamoring to get into the market.
That a lot of the venture capital firms out there that are investing are really getting back to basics and saying, is the thing I'm investing in structured the right way? Does it have the right governance model? Does it have a board of directors that's a credible governance mechanism?
Okay, so if you own a big company, listen to what this guy's saying, you have to have a 12-person board of directors. I'd say get your family members, because you trust the people, everybody's getting paid in the family. But if you don't have a board of directors, guys, you're going to have one person running the show, and if things don't go well, it ends. So if you're a smart person like me, and you have a couple people on the board director, you'll be doing a lot better.
Have product? Do they have algorithm? Do they understand the regulatory landscape? Do they understand these various discussions that we're having here? And I think we're going to see an evolution away from, these massive checks for PowerPoint presentations, frankly, turning to something that's a little more meaningful. We're also in an interesting cycle, as we've seen over the last few years, where there are a lot of venture firms that are going off to raise right now, and their investments may or may not have shown promise or shown any sort of delivery. Most venture firms, even if they say they're 6 or 7 year funds, really are trying to get exits within 3 years. So if you're investing in something that's a PowerPoint presentation, you've got to get out of it in 3 years to get.
So most companies last for about 7 years, or turn a profit every 7 years. So, you could run credit cards up to $100,000 if you got enough credit and you got a second job. So a lot of people will, with the big picture is, if you take out a big loan and you're not going to get some kind of interest off it, then don't do it. If you're going to have to pay into it. So look at the lump sum of how much you borrowed, and then look at a percentage that you have to take off from that lump sum of money.
Your investors their money back. You're not in a situation where you can really trust that the market inertia is going to take that value up now. You're in a situation where it comes down to basics. Are they selling? Are they making money? Do they have sticky customers? The normal, I'd call it bread and butter of venture capital. So I think there is going to be a change. And I think as we get into next year, I think raising for artificial intelligence is going to be a lot harder. It's going to be based on revenue. It's going to be based on technology. It's going to be based on governance.
And Sultan, just to quickly follow there, obviously some of the legislation that we've seen has been in reaction to developments from countries like China and their high tech in this space as well. Could that be what tips perhaps some sort of consensus in Congress to when they see that perhaps this is something they need to be getting ahead of as other countries pull forward that don't have that same red tape to get through?
That's a great question. You look at China on one side, which is moving incredibly quickly with very little regulatory input. You look at Europe, which is moving very quickly on regulatory with kind of less AI, and the US is kind of in the middle. The question is going to be, the balancing act between, letting innovation move at the pace of innovation or, slowing it down through some sort of regulatory evolution. And, the US has always kind of lived in the middle of those two worlds. And right now we're seeing that represented politically with one party being very much in favor of one and the other being very much in favor of the other. You can figure out who that is. And out of that, we're going to be in a situation where over the next 12 to 18 months, I'm hopeful we'll get to consensus, but I'm not sure we are because the economic impetus is still on lack of regulation. And that's still what's driving the fundamental investments in AI. It's not government research like it was 30 years ago when I got started. It's fundamentally based on, do you make money? And so then there will be a push against a regulatory solution.
Ashley, this feels like conversations in so many industries. To what extent does regulation oversee the safety of innovation without stifling the actual innovation? How much of what's happening around the world matters to lawmakers? Does that speed things up? Is this kind of a wake-up call, if you will, that they've got to move quicker because they didn't necessarily do that with other issues like social media and crypto?
It absolutely is a wake-up call, and I think you really saw that momentum moving when the Biden administration rolled out their AI executive order shortly before the global AI summit in the UK, where Vice President.
Okay, listen to this. I'm going to say this and get off here so I don't get in trouble. About 1 year in December 13, coming up on 11 months. I've been living here a little over a year. I try to use fake voices to imitate other people. I would, there's no trouble in making this, but I would call somebody up and use a fake voice and imitate their voice in order to get stuff that I wanted to do it. So I can imitate voices, I can sing and imitate voices. I can even make car noises to imitate the car noises on the back end. And I use fake noises and voiceovers, but real voiceovers before I do it. So that's it.